fixed annuities. And so we've shown that year after year just being right there at the top. And the reason why we're having a record-breaking year is because of two aspects. So we've got our guaranteed income story, which is by far head and shoulders above a lot of other carriers. In terms of guaranteed income, we've been number one in the space for about 5 consecutive years. It does fluctuate from time to time, but at the end of the day, when we're pricing our products for guaranteed income, it's to keep the consumer in mind. We're trying to give them their best income available off of what their portfolio allows, but at the same time, as a company, when we're pricing those products, we're trying to keep the tail end obligations in check. So American Equity is going to be there at the end of the day. So we're not just competing for rate, but we're competing for rate, and we're going to keep those tail end obligations in order and in check. The second thing that American Equity is going to do is be consistent on their customer service. We answer the phones within about a minute, sometimes a little bit more, sometimes a little bit less, here in our home office in West Des Moines, Iowa. So you're going to get someone that speaks Iowan, which hopefully you can understand them. And you know, we're going to also offer some other things customer service-wise, just like Insurance Network America. They are very high touch when it comes to their agents, and they are available for you all the time. So partnering with INA and partnering with American Equity should have an unforgettable customer service experience. One thing that I think is undersold about American Equity is right here on your screen, is that we are American owned and operated. Especially with the baby boomers that you're working with today and the older clientele, they want to know that that money is being kept in the United States of America, here right in West Des Moines, Iowa, in the heartland. And you've got a lot of carriers coming in and out of the market these days, a lot of private equity firms coming in and buying insurance companies. We don't know what those tail end obligations look like. We don't know what their true goals are as a private equity firm. Because we are American owned and operated, and because we are a public company on the New York Stock Exchange, we have a duty to you as insurance agents, we have a duty to the client, and then we also have a duty to our shareholders to run the best business that we can for long-term value. So here's a couple marketing pieces that we have I want to talk about. This is a billion-dollar sales piece, is what I've been, what it's been referred to in the past, because it's sold over billions of dollars worth of premium. It is a great picture to help the client understand how fixed indexed annuities work. This isn't a hypothetical. This isn't a back test. This is a true policy that was issued on September 30th of 1998. And it is a product that's right in line with our Choice series. At the end of the day, they're actually very similar in the way that they grow, and even the cap and participation rate structure. But it shows to the client that going sideways is not necessarily a bad thing. When you have so much turmoil in the market, especially as of lately with the whole Brexit situation and Europe, or Great Britain leaving the EU, we've seen a rocky market here in the last couple of days. So we'll see if that stabilizes. If it goes down and you're in American Equity, or if you're in a fixed indexed annuity at all, you are protected, and gives the client a nice peace of mind. So this helps you tell that story. It helps put today into perspective where the market's truly at. We are at record highs in the Dow and the S&P. We were right there at the top of as high as it's ever been before. So if you don't have this piece in your sales kit, you absolutely need this piece in your sales kit. Our top producers, whether it is a $40 million a year guy or $50 million a year guy, all the way down to a $1 million a year guy with American Equity, a majority, I would say, 85 to 90% of those insurance agents and holistic planners are using this piece. The second piece here is a piece that we call Don't Go Backwards, and it just talks about slow and steady wins the race. Everyone knows the story of the tortoise and the hare. If you look at the top graph there, or the top chart, 7 plus 7 minus 7 actually comes out less than 2.25 plus 2.25 plus 2.25. So the second story isn't necessarily sexy, but it takes the emotion out of investing your money, and slow and steady wins the race at the end of the day. When you don't have to make up losses, which will show you a piece with the Choice Series, how that truly works at the end, it looks really, really good.
And thank you for that. And like Tom mentioned, these pieces are used by our top producers. And one benefit here of American Equity, and what we'll do for you is, you see down here all the examples. We'll actually customize any marketing piece you see out online with your agent information, your name, your phone number, your email address, your website, whatever you'd like to have, and that comes free to you. We'll do all the customization and send you the PDF for your hands, for whatever you would like to do. And we can also make these in different sizes. We'll visit agents' office around the United States, and the first thing we see when we walk in the door is that real benefits piece, the $1 billion piece that Tom mentioned. It's the #1 marketing piece for us, and people use it. It allows consumers to look at a graph while you're sitting there drinking coffee, having a donut, what have you, during that meeting, and it grabs their attention. It makes them ask, Mr. or Mrs. Client, have you seen this graph? Have you been looking at this? Would you like to have some more information on it? So it's a great piece. It has your information. Call our marketing department and we can get those customized for you today. Another thing we're very proud of here at American Equity is our guaranteed lifetime income. As Tom mentioned, it's a consistency factor here at American Equity, and that's what the market we've been in is our guaranteed lifetime income. And our Barron's article comes out once every year. The next article should be coming out, I don't know, anywhere in the next few weeks. And it actually lists the top 50 index annuities in order of income. And American Equity is proud to say that we have been mentioned all 5 years of this Barron's piece. We are the only insurance company to be mentioned in all 5 pieces. So that's where the consistency factor comes from. We can prove and we can show you with these Barron pieces that we are consistent in the marketplace. We're not in, we're not out like some companies have been known to do. We are here for the long run, and we're here for our clients and for the guaranteed lifetime income. And this is where the Barron's pieces have come from. This is our options here for our guaranteed lifetime income. We're not going to spend too much time on it, but I would like to mention the one piece that I like to talk about is, what option should I choose? What's the best for my client? Those are the questions we receive day in and day out. When you're looking at guaranteed lifetime income, options 1, 2, 3, I would always put in kind of a graph. And I'd like to say option 1 is our 3% no-fee income rider. I would always select or always choose if you are planning on triggering income early in the contract. And early in the contract, I mean in years between 2 and 3 within our income rider, I would always select option 1 because there is no fee. If you have a longer period of deferral, say anywhere between that contract year 4 through 10, option year 3 with the 6% income rider would give you the highest income. And then anytime you're planning on waiting for income, contract years 10 and beyond, our option of the 5.5% income rider is always going to be your option to choose. So that's my 2 cents on there. We do have other options that are available. Make sure they are state specific. Tom's going to go over those for you.
All right, so option number 4 is exactly like option number 2. So you've got the 5.5% roll-up for a maximum of 20 years of growth. However, for an extra 10 basis points on the fee, you have the well-being feature. The well-being rider is different from anything else out there is because it doesn't, you don't need confinement. So what that is based on 2 of 6 activities of daily living. If you have a client that cannot do your 2 of 6 activities of daily living, they can double their income for a 5-year period, or they can increase it by 150% if it's joint life. And so the really nice thing is if you have someone who wants to stay in the comfort of their own home, which I know my parents have expressed that to me year in and year out, that they refuse to go to a nursing care center. And so this will give them an opportunity, if need be, God willing, that they have an opportunity to earn extra income and cover those health care costs, or if a spouse or if a child has to skip work to go take care of their parent or their spouse, it gives you a little bit of extra income, so you have the ability and the flexibility to stay away from work and provide the care for the loved ones that you care so deeply about. So then option number 5 is the 6% with Wellbeing Rider, which mirrors option number 3. So for an extra 10 basis points, which is pretty much giving it away at a total fee of 1%, you are allowed to double your income, increase it by 200% or 150% for joint life. So that is a nice benefit. Like I said, there's no nursing care center or confinement requirement there, which can be a great, great benefit.
And one extra benefit with the lifetime income benefit rider, some do tend to forget, is when there is the fact of the single or joint payout factors, with our products and our contracts, even if it is an IRA, if it's single owned, say the husband, and the wife is the individual who is needing that care, can't perform 2 out of the 6, if you do turn on joint income, that income can be used for either or. So that wife, you can always use for that confinement option as well, or excuse me, the 2 out of the 6 ADLs as well with the Wellbeing Rider. Just one little thing to always remember. We are flexible with that, with the lifetime income benefit rider payments for you.
Okay, so before I go on to option number 6 here, I kind of want to position these income riders for you. These top 5, the first 5 options are why American Equity is having we're on pace for a record-breaking year. So our best year ever last year was $7.1 billion. In the first quarter of this year, we did $2.1 billion, and most of it was because of this income rider. So that was, when you're looking at American Equity and the income rider, this is where we place our this is our bread and butter and where we place a lot of the money into. To be wide open honest with you, we are head and shoulders above everyone from a 12 to 20 year deferral point. Right in that 5 to 10 years of deferral, 5 to 11 years of deferral before income, we're right there with the competition, or we might be a couple dollars a day lower. So I just wanted to position this for you. If it comes down to it and American Equity is 3% off of what the guaranteed income is from another carrier, I guess I would challenge you in saying, is it worth $1 a day or $2 a day to you and your client for consistency in a company, for a company that's committed to the long-term obligations, and for a company that's also going to treat your renewal rates and caps great. So if you go out to the website, you can see the renewal rates on policies. We tend not to touch policies if we can. We don't try to put any rates out there that's going to lock the client in for 10 years. Give them a strong rate off the bat and then drop the floor out from underneath of them. So is it worth $1 a day in those cases to put their income with a company that's committed to that long-term value? So option number 6, as I get off my soapbox here, option number 6 is the new indexing income rider. How the new indexing income rider works is based on a multiplier approach. So what we're going to do here is, if it is a bonus product, which is our top products, our bonus gold, retirement gold, foundations gold, those were in the top 3 of sales in 2015 and the first quarter of 2016. Those products have a 400% multiplier. So whatever is credited to my income or my index account or my contract value, let's say that I have a 2.25 cap. If I cap out and hit 2.25 on my product, on my contract value, and I multiply that by 400%, well, that's an income account credit of 9%. And same thing with the non-bonus products, like what we're going to talk about with this choice series. They have a higher cap and a higher participation rate, so the multiplier is a 2% or 200% multiplier. We've got a cap of, let's say, 4.5%, and some of them is even 5% more. 4.5% is what we get on a contract value, which is pretty solid in what today's interest rate environment is. multiply that by 200, and we have an income account value or index credit of 9% for the year. So we've got it is a really strong story, and Tim's going to share with you how we can illustrate that here right after we talk about the Choice Series.
All right, so we're going to go over the Choice Series here real quick, and this is the hottest product here at American Equity. It's actually 3 products, but there are just all different types of surrender charge periods. And as you see here, one thing I always like to point out, individuals are always looking for safe money, whether it's day 1 of retirement or some of their last days in retirement. In the Choice Series 6 and 8, so a 6-year and an 8-year product, will go up to issue age 85. This is the oldest that I've seen, and here with American Equity, it's the oldest issue age we can offer for a fixed index annuity, while the Choice 10 only goes to age 80. It is just $100,000 minimum premium, as you see here, the maximum premium rates, and as you see here, surrender charges. It all starts under 10. So these are friendly. All states that are approved except for the good old state of New York, and it is a great product, and it has been very well received. Nonstop, I hear it's one of the cleanest products we offer, and agents love it and clients love it. So I'm going to go here, and really, Tom and I talk pretty much every day about the Choice Series, and individuals are always coming up with new ways to try to deliver it to clients, and he's just going to share some of those ways individuals out in the field are presenting this to clients. Say maybe what funds are easiest to come over from, what funds are really starting to grab attention, and we have a little list here for you, and he's going to go over some examples.
Thanks, Tim. So these products, because they're short-term in duration, 6, 8, and 10-year products, they are great for finding non-qualified money, right? So if you need a quick holding tank, but you need a little bit more than a CD or what the MIGAs are able to give you right now, I think these are really good products for that non-qualified money. And when we introduced these products, we introduced them from Eagle Life, which is a sister company of ours, but they offer the same product across the table, but it was to the BD market and the bank channels. And there's a lot of non-qualified money, and so we see about most of the movement of this money coming in is non-qualified, so it's a great replacement and alternatives for those, especially bonds. I'm not seeing in the next year or two an increase in the interest rate environment, but the interest rate environment, it doesn't have a lot of room to go lower. So if it does go lower, bonds will go up, but in the likelihood that bonds are going to or the interest rate is going to increase, then bonds are sure to fall. So bonds aren't what they once used to be. Over the last 20 years, interest rates have continued to fall, and so bonds have been a good option. But it's time to keep your eyes on those bonds and the interest rate, just to see if there's any movement at all, or if that interest rate's going to start going up. So these products, because they are non-bonus products, they don't count toward any incentives. They're very DOL friendly. They offer more potential yield to their clients, and we'll talk about that in the next slides here. And then the commissions look good too. They're very competitive commissions for a 6-year product. If you need a holding tank for 6 years and then you need to move it again and reposition those funds, you have a good opportunity to create some moving income for yourselves and some assets in motion. So here's the Choice 6. The Choice 6 is a very popular product among the banking and broker-dealer channels right now. It is a good product for insurance advisors as well, just as a short-term holding tank. Look at top there. There's an annual point-to-point, a cap of 4.5%. 4.5 on a 6-year product is great, seeing as on bonus products, if you want a 10-year product with an 8% bonus or 7% bonus, you're looking at a 2.25, 2.15% cap. So very, very strong compared to especially any of our competitors out there. Really nice position. This is the products that have really taken American Equity and the industry by storm because they're so simple, clean, straightforward, and back to the basics with indexed annuities. I also want to point out the fixed rate. If you want a fixed rate of return for the year, 1.9%. It's better than what you're even going to get in some of those jumbo CDs with only a $10,000 minimum investment. Here's the Choice 10. The Choice 10 is quickly becoming one of our best sellers, and that's because of the 45% participation rate. We don't see a lot of use of participation rates anymore because they're so low. But with a 45% participation rate, you have an opportunity to sell almost half of the upside of the S&P 500 with none of the downside risk. It's a very, very easy story to tell. And if you go back to that real benefits chart, that it's in the later years on that product itself, it's about a 50% participation rate. So if you go look at about the last 4 or 5 years, it's been right around at that 50% mark. It's been performing really, really well. You have a monthly point-to-point, a 2% cap per month, which in the perfect year is a 24% return. If you were in the market in 2010, 2011, it wasn't uncommon, and it's pretty average in the monthly point-to-point to see double-digit returns. We're in a different market now, but it still gives you upside potential. And then the fixed rate of 2.25. That's similar to what our 5-year MIGA is going to offer right now, so that's strong. All right, so we've got the Choice series, how the 45% participation rate. I don't want you to really focus on the upside of what this is, but more of how it reacts when the market drops. We start with a $100,000 investment. The first year, and this is back in '95, so I think we're in more of a tech bubble at the time. S&P is going to return 34%, so it's a 15.35% return. And so you've got a great opportunity for, like I said, more yield back to the client. But look at 2000, 2001, and 2002. The market completely tanks. Your next door neighbors, if you're in this product, your next door neighbors lost 50% and then some when you add in the compounding of their portfolio, and your investments didn't lose at all. And then 2003, 4, 5, smaller rate of returns, but at the same time, you are back on your way up again. When your client or your neighbor, if they lost 50% in the market and gained 50% back in the market, well, you're only at about 75% of what your original investment was. So it takes away the market risk. And we can actually illustrate this with our new illustration system. So that's what Tim's going to show you right now.
Perfect. And I'm not going to go into too much detail. If you kind of like a step-by-step guidance of the online illustration system and online Ready app, feel free to give us a call. We'd be more than happy to walk this through with you. I just know it kind of takes some time, and would like to get some more information out there for you, especially about our Gold Eagle program. So as you see here, here's our home website. If you have any troubles logging on, our phone number will be at the end of the webinar. The calculators area is what I'd like to highlight here first. Right under here, under current rates, is calculators. And we have multiple calculators now. We have a web-based version of a fixed index annuity illustration software, and we also have our pivot software. And the newest one is actually our web-based version right here, so click here to launch the software. And this illustration tool actually goes out and shows historicals. So it's going to judge based back off the last 10 years of the S&P, and it shows some really, really nice returns. And it's actually a very positive tool to show clients. Because individuals out there and other companies have been using this for so long, many individuals have been so used to receiving these types of quotes, they start to wonder why American Equity didn't have them. So with the new indexing income, it's a great new tool for you to show your clients. And if you have any questions, like I said, call our marketing department. It's very easy to use. It shouldn't take more than five or so minutes to kind of master that. Along with our illustration tools, our pivot software is great for our lifetime income benefit riders. So anytime you're planning for that guaranteed lifetime income, make sure to use our pivot software. And then our newest piece, we're promoting it all over the place right here. Speed up the application process. Click here to use Ready app. Over here on the left-hand side, you'll see our Ready app. I don't have access to this while I'm logged in as myself, so I can't sign any contracts for you guys out there when you call in. But it is out there. It's available for you. It's quick and easy to use. That's the number one thing. You know, an individual once told us it speeds up the what was the comment there, Tom?
The submission to commission process.
Submission to commission. That's what we need these days. Is faster processing and all that stuff. And with our customer service here at American Equity, the Ready app is only going to enhance that. Right now, it usually takes us about 24 hours or a business day or two to send out a transfer paperwork after you've sent in a full application packet. You fill something out on Ready app, we should have the actual contract number ready for you as long as it flies through our suitability process. We'll have a contract ready number for you within minutes, and that actual transfer paperwork or 1035 will be able to be sent out within, I don't know, about a half an hour nowadays. So it's no cost to you at all. How does this sound? You'll never have a not in good order application. It's always secure, it's always online, and once again, you will get paid sooner. So it's just some awesome things coming here from American Equity with technology. We really didn't talk about the growth of our home office and what this industry has done so far recently, but we hired about 50 IT professionals to help us work on these types of systems and software. So we are committed not only to our policyholders, but also you guys, the agents, and our technology. We know it's a big part of your guys' life, making it easier for you once you find that client, once you find that fit with American Equity. We just want to make it easier for you, and we believe we can do that with Ready app. Here's other ways we make things easier for you. It's called our Gold Eagle program. If you're not familiar with the Gold Eagle program, this is something that every time I talk to an individual that is a Gold Eagle member, they sit there and talk about the benefits. They tell me how good the system is rather than I have to tell them how good it is. So if you have questions, feel free to call us. But they're things that make your day easier. That's what we're about. We want to make it easier for you. It's a FedEx shipping discount up to 60% on your outgoing activity to anywhere. It's your own FedEx number. A Staples program, you have a Staples individual, you can call up and order any types of office supplies. We offer a signature guaranteed service if you're series licensed. We have a Gold Eagle form out in Vegas. But really, once you get down to it, these are all club level benefits. So $1 million producer with American Equity with our Gold Series. Where you really get into to the elite area of American Equity and why individuals care about these so much are marketing dollars and the unvested restricted stock units inside of American Equity. So it gives you an opportunity to be a part owner of American Equity. That will go a long ways when talking to a client and how you are vested in this program and how you are vested in American Equity. But the marketing dollars start at $2 million and go all the way up. The more you produce, the more we'll pay you, because those clients cost money, and we understand that. As well as some other benefits here for some of our top producers. But like I said, give us a call, get a Gold Eagle brochure. We'll be more than happy to talk about this. If you have questions on how the FedEx works, how the Staples works, we can always make time to help you understand some of these programs here at American Equity for doing business with us and being partners with us. With that in mind, thank you. Tom, I know we said we wouldn't go over a half hour. I think we did, so I apologize for that. But there's so much to talk about right now, and so happy to be here and talk with you guys. Tom and I both have access to this email address. Rather than give you both of ours, we just figure we'll give you a webinar at american-equity.com. And if you call that toll-free number, you can get one of us as well as someone in our marketing department. I believe it's phone prompt 2 if you want to go straight to marketing. So thanks again for having us, and we'd be more than happy to stay on if you have any questions.
No, absolutely. And then I just want to thank you both for joining us. Everyone on the call, if you have clients in mind right now that you think this could be a great solution for, don't wait. Give us a call. We can help you put a proposal together. We'll also be following up with you on making sure you have these competitive sales tools that were referenced by Tim and Tom on the call. Those are very strong pieces. I'm sure many of you have seen those before, so thank you for weaving those into the presentation. It's no secret that no surprise that American Equity is having another record year. And it's their consistency in the marketplace. They've been an industry leader in FIA solutions for your clients, and we want to bring these updates to you. So please ask us more about the online app system, their illustration software. If you have any questions about their product updates, we're here to help you iron through those so you can be where you want to be, which is in front of your clients. Again, at Insurance Network, we're committed to you, helping you grow your practice. If you want to call us before we reach you, you can reach us at 800-456-7999. And if you're not contracted with us, I want to encourage you to take a look at what we can do for you at Insurance Network America. We have the right solutions, the right contracts, and the right people to help you. So again, I want to thank Tom Kostick and Tim Heltman from American Equity for joining us today, and thank you for everyone for participating, and have a great day. Thank you.